Welcome, everyone. Welcome to another live show of the 5ers Live
Yeah,
Trading
baby.
Room. How is everyone doing?
Yep. I always forget that we're actually just me and you, and I was expecting people to be like, "Oh, yo, we're doing amazing" and stuff like that, but I forget that it's just you and me talking. And I think I can hear you coming out of the speakers. I can hear myself coming out of speakers, Victor. Your
Yes,
speakers.
I am. Hold on. I'm sorry. There's.
There you go. We're going to let some people come in. We'll just put a little bit of music. We've got a special guest today, though. A very, very special guest. He is a regular on the show, but every time he's here, he lifts up the stream. And I'm going to ask him a lot of questions as well today because I'm super interested. Should we just bring him on? Let's go.
Right, yes.
Here
I
he
got
is. How you doing, Dirk?
Dirk.
You all right? And we can't hear you. You're muted, mate.
Okay, let's try that again.
There you go. Wait,
Hey,
hold on.
everybody.
We'll try this again. There you go.
How are you guys? Good to be
We're
back.
doing
Hello,
fine.
everybody out there.
Hello there. Yes, Dirk. We're happy to have you on the show again.
Thank you.
How are you doing today?
And I'm doing great. You know, it's Monday. It's the start of a new trading week. And as somebody who is in the nice position of having his passion as his job, Mondays are always great.
Nice.
Yep.
Yeah, for sure. I had a little sound difficulty there. Were you able to hear the echo all the time, Alex, and everyone else? Because
It's gone. It's gone now, though. It's
okay,
sorted.
Okay, all right.
But yeah. It's,
so great stuff. Are you in any position, Alex?
We're talking about my positions, huh?
The one question you're not supposed to ask on a trading stream.
I can tell you what, on Forex I haven't been. All of my my time has been mostly on the crypto market. I am actually long Bitcoin, but I'm long Bitcoin a little bit further up. Yesterday I actually got into a position yesterday on a nice break and retest. I'm actually going to show it because it was super nice.
On Bitcoin,
but it was on Bitcoin. The only issue. God, what's going on here? Let me just share this window. It's not going to show anything. Okay. So I was actually in this position yesterday. In this area here, and I was in this area here, and I actually had to take profit there, and I wasn't in front of my phone, and you can see how close it got to my take profit, but it didn't take to my take profit, and by the time I actually got back onto my phone, it was already underneath, and I actually am still holding on to the bag with this one. I'm still holding on to a Bitcoin long, so we're not looking too good. I'm not going to lie, because we have got a lot of room to the downside, and it just looks disgusting. So I should get out of this position. I'm just looking to see what happens with New York, see if I can get a bit of a spike up beforehand.
It's a bit of make it or break it day for Bitcoin today. I haven't shared my screen actually. Huh? I should do that.
Yeah.
Before talking.
Not just Bitcoin, altcoins. I did start realizing some spot positions just on Solana. And I did start covering a little bit, just so I had a little bit of cash just to get in again when it goes a little bit lower, because I do see that we've got some room to go. Obviously, you've got this massive range that we haven't hit. We haven't broken the top of it. We had that deviation, so we're stuck in this horrible range, and now we're at the midpoint of the range as well. So the only problem is, if you are Bitcoin maximalist, you're fine because you're stuck in a range. It's more relaxing, it's not really doing anything. But every 1% move on Bitcoin is a 10% move on altcoins, which for somebody being totally in altcoins is super, super painful, because this move after we had CPI and PPI, I think it was last week, which was actually I thought it was quite a bullish reading. So I went long. I looked at the chart and I was happy to go long, and I got caught out. I think a lot of people got caught out on this move here. It was CPI here. I was long in this position, and then FOMC comes out. I was like, wow, this is fantastic. FOMC comes out, bang, retrace the whole thing, and then you've had this kind of price action, which you could see, okay, is it holding as support? Are we going to go up and make another push up? But it just didn't happen. I've been caught a couple of times. So
yeah, Bitcoin does what Bitcoin likes to do always, no? Like the unexpected. But yet, like if we look at the grand scheme of things, it's really. Can you, Victor, maybe share?
Yep,
you did already. Thank you so much. It's really not out of ordinary what we are seeing here. If you compare like what happened after the halving in 2016, what happened after the halving 2020, after 2016, it took like 300 days. So we're speaking like about 10 months here until Bitcoin really started this super bull run. Super bull run being defined by breaking out of the upper green channel of this log regression here. In 2020, it took 220 days to really break out. So if we are going to see something like this again this year, then we're talking 220 to 300 days in the future since the halving, which makes us somewhere end of October, beginning of November 2024 to February 2025, where we probably will break out to the north here. Breaking out to the north, by the way, would mean prices over 100K here in Bitcoin. So these are, in my opinion, quite good buying prices. And I think, like to the downside, also things are a little bit limited for Bitcoin. It's a bit make it or break it at the moment, because we are around this 8 weeks moving average again. And whenever we close below that, Bitcoin tends to test this bull market support bands. But the good thing is here, we're with those bull market support bands not in the situation anymore that we were when we last time broke them, when the price was at 65,000 and the bull market support bands were still trading below 56,000. They are now trading 61 to 63,000. So that's not, it's still a drop, of course. We're still talking about 5%, obviously, here, roundabout. But I mean, for crypto, that's not a lot. If you're on altcoins, of course, that could potentially mean like another 20% down. But for me, like whenever we go down here, really, this is maybe the last opportunity to get in rather cheap. I have to say, I don't want to sound like, oh, I forecasted all of this. I didn't. I also thought when we saw the structure here forming that we actually would break out to the north already right now. But I guess it's a little bit like also dependent, really, if we get this prior to normal breakout to the north, to what we see in terms of economic stuff coming from the US, especially a job count, everything that, aims towards seeing interest rates being lowered. And like 8 months ago, I said, like, I'm expecting first rate cuts in May, but the inflation rate reading was like not so great. The job market was far too good, which still is always something insane to say, like to expect rate cuts. But I mean, after the interest rate decision last week, Jerome Powell said interest rate cuts are coming. Maybe not like 2 or 3 this year, but at least 1. And this is a positive thing. And if this one is like going to be maybe October, maybe November, that also would coincident really nicely with the upswing we should then see from Bitcoin. The upswing, I meaning breaking over 100K. So even now, if you think like Bitcoin is going to the north, these are pretty good prices to buy long term. Not if you are scalping the market, if you're short term, if you swing trade.
Trading is tough.
Yeah, day trading Bitcoin is super tough. That's why when I day trade, I usually like to trade altcoins as well.
I see. What would you say are the chances of a lower price to get in for someone who still wants to buy, who's still not in or not completely in? Do you think it's likely?
If you're not completely in now, I would do actually 2 or 3 things to be more precise. I would actually buy some right now, because it could be that we bounce off the 8 weeks moving average here again. And then I would put my limit order here somewhere, around 63,500 and 61,500 in case we drop down and touch the bull market support bands again.
Okay.
But I wouldn't necessarily bet on this happening. I mean, it's also like a pattern we see for people that don't have Bitcoin, that want to get into Bitcoin over and over again. This, once it goes down to 60, once it goes down to price X, I'm going to buy. And when we reach this price, then the new narrative is also, I think it's going lower. My new limit order is going to be at 55 or something like this. So if you believe in Bitcoin, if you believe this giant decentralized network is still going to grow, and the growth is going to be, the catalyst for the growth is going to be an increase in price mid to long term, then it doesn't really matter, if you buy now at 65 or 66,000 or at 63 or 60 or 59,000 US dollars.
Of course.
Because then we are talking about prices in 2025, maybe of 150 to 200 to 250,000 US dollars. And you don't want to miss up on that upside just because, you were trying to catch the bottom once again.
Waiting for maybe 5% cut on the price.
Yeah, exactly. That's the thing with Bitcoin being the place at now. We've been in a bull run for about a year, over a year now. So you've kind of missed the train, to be honest, to get into Bitcoin at a good price and to actually, benefit from an upside of what we've got another 20% up to the upside before, things get absolutely ridiculous. On 100, what would that be from here to 100? No, it's about 50% actually. But in my opinion, the place where you can really find some gains is the altcoins. And the only difference is the price action that we're having now on Bitcoin. It's still roughly bullish. We're in a range. Nothing's really happened. But now if we look on a macro time frame like the weekly on many altcoins, they've broke structure. They've broke bullish structure. They look very bearish. So it's but those are the places where the opportunities are. Look for Solana, for instance. I know I blow Solana's horn so much just because I've got a big bag, but if they do get an ETF like Ethereum's getting an ETF, or they even just follow the same kind of rhyme as Ethereum, then you're looking at a massive gain. It's very cheap at 140.
Yeah. And it's every 4 years really the same. If we would have talked about 4 years about this, we saw exactly the same structure again. You see Bitcoin accumulating, like altcoins bleeding first, accumulating, and then later in the super bull run, altcoins are going to outperform Bitcoin again. I really get the 2020 vibes today. And I asked my wife this morning, I said, I have exactly the same feeling around this time that I had in 2020, where I also thought you have to poke it with a stick and ask it to do something finally. Everybody's waiting for it to do something until the majority of people probably loses patience. I have nobody in my surrounding that is not into crypto yet also asking me about, hey, Bitcoin, it's like trading me at all-time high. Should I buy? It's not happening right now. And this leaves a lot of leeway to the upside. Of course, there's always the possibility of a black swan event, something that either destroys Bitcoin. I don't know what that could be. But I think there we are talking about a scale of events that will affect the financial market as a whole. And as that, it's probably not going it's going to be, it doesn't matter where you're in. If you're in stocks, if you're in Forex, if you're in crypto, because then everything will be affected.
Do you feel like the kind of trade war that we potentially got on with China and the Europe and all of that could have a mass effect on the markets as a whole, or even just, maybe the Fed doesn't, cut rates this year. Maybe they actually hold on the rates as they are. Do you think that will have a big effect on what's going on?
If they do, well, first of all, we always have to see when the Fed cuts rates, that means there is an economic need to do so. And usually, if you look in the past, you will see the first weeks after rate cut, not a good performance on the stock markets. It's always more a long term. It takes a while until these rate cuts really affect the markets, and especially the borrowing markets, like borrowing money to consumers and to companies at a cheaper price to stimulate the economy again. So if they don't cut it, probably is going to have an effect, but I don't think it's going to be such a super negative effect. Maybe we're going to see something like prolonged sideways markets. Maybe even this is the use case here until February 2025 or something like this. I don't want to talk about like potential wars or something. Of course, there is a huge. If I'm not a military expert by all means, I've never shot a weapon in my life, and but if I listen like to experts on warfare and strategy, I'm a little bit concerned, of course, of what they are saying, that this is already a phase of things escalating, not only between the EU and Russia, but also, of course, between China and the USA, because Taiwan. But yeah, then again, if that happens, I think we are going to have other problems when caring about trading, honestly speaking.
Yeah. Certainly so. What would you say is the effect on election year on crypto? Because crypto hasn't been, we don't have like historical data since crypto hasn't been like 50 years existing already. But what can we say about the election year? What can we expect for that influence? Is it going to be the same as the equities?
It is. It is, and I actually just had because I was also interested. A couple of months ago, I had a look at this, like how did the stock markets behave after each election, like the election of Barack Obama, the last one, or the first one of Donald Trump, the first one of Joe Biden, and you can always pretty much see the same pattern. Usually after the election, I'm talking about November now, not the time where the new president actually enters. Or it takes the seat, which is a couple of months later always, no? So how did the stock markets behave from them? And you saw under all three presidents kind of the same pattern. You have 1 year of really booming stock markets where everything goes up, then a choppy phase of roughly 1.6 years, and roughly in the middle of the time to the next election, you have a bottom in the stock markets. And since the fundamentals of the economy still being addicted to cheap liquidity, hasn't changed, I think we could actually see the same pattern again, no matter if we have Joe Biden or if we have Donald Trump. So this is also like kind of my game plan for crypto and for my stock positions, that kind of after 1 to 1.3 years after the election, I'm going to slowly fade out and change again to risk-off assets. Or cash even, US dollar cash or something, depending on where we see something like euro dollar again. If that one is trading below 1, doesn't make sense to buy US dollar.
What other risk-off assets would you be looking to buy?
Well, there's always, of course, treasury bonds, like US treasury bonds or EU treasury bonds, but that always depends on how the interest rate environment is then. If we're still like, let's say around 4% or something, yeah, okay, I would be willing to buy that. If we're talking about an interest rate environment where we are around 0% or something, I wouldn't. You can as well hold your money as cash then. The effect is the same, but you're more liquid if you want to get out. But I'm by all means also not an expert on fixed income. So this is really something where probably I would consult my network, people that know better than me about fixed income and interest rates about.
Yeah,
but that's like roughly the game plan. Of course, that can change depending on really what we are going to see the next 6 to 8 months, in my opinion.
All right, I know here we have to say to our viewers, we're not giving financial advice as a disclaimer, but what ballpark figure would you say for someone who is organizing his or her portfolio? What kind of weight should that person put for crypto, and maybe even the division between the crypto and the altcoins? I mean, Bitcoin and the altcoins.
Yeah, Alex is not going to like this. if I'm like 100% in Bitcoin. I used to have some altcoins, some AI coins, which I sold in January. Also in January because I simply forgot about them, and then I suddenly saw like, hey, you still have some AI cons, and they made nice gains, tax-free in Germany, by the way, after 1 year. So that was a nice thing. So for me going forward, Bitcoin, just because of the fact, I'm not saying like we are going to for sure see altcoins outperforming Bitcoin by a huge amount. going forward again. But the thing is always picking the right altcoin. If you compare the top 10 of according to market cap of altcoins now to what they were 4 years ago, you will see not a lot of the coins that were like hyped 4 years ago have actually survived. And
they've
so
retraced
the thing is always
their whole move this year already.
Yeah, imagine like, okay, even if you make like 10x on one altcoin, be prepared that you have like 7, 8, or 9 altcoins that are going to either underperform or where you will lose all of your money. So I'm on Bitcoin. It doesn't mean like that you cannot take like 5 or 10% or whatever you feel comfortable with to do a little bit of gamble in altcoins. I understand that. I mean, the alpha is there if you are lucky. But going forward, I'm of course I'm older. I'm a bit more conservative. I would stick to Bitcoin. I would stick to stocks. Stocks, always the question, of course, which stock to choose. I usually go by buying ETFs because I'm not a good stock picker. And this is like the strategy going forward. Of course, that one is boring. You know, if you're aiming more on, hey, I want to trade the markets, then just forget everything I said right now. This macro outlook, of course, doesn't have anything to do with swing trading, with scalping.
I understand. So if I understood you correctly, you would say Bitcoin is the safest bet if you're thinking long-term and portfolio mindset.
Yeah.
And what about the distribution between let's say equities and crypto in general? I mean, if you okay, so you're gonna go to Bitcoin for the crypto part, but what percentage would you say, even if it's not financial advice? I repeat, but what would you be saying? Is 10 conservative? Is that too much volatility, or?
I personally am totally over-invested in Bitcoin. I have like 60% in Bitcoin, around about 30% in stocks, and the rest I keep a little bit liquid, either to buy a bit again when prices come down, or to do a little bit of trading also. I would, if you're like a total beginner in investing and trading, and especially maybe somebody who is afraid, like when you see those volatile movements we often see on crypto, then don't invest too much in there, because it will probably give or force you emotionally out of a position at the wrong time then, because you're afraid things are going to drop more. It took me a while, like one whole bull market cycle, also to understand this and to kind of get rid of the emotions of, hey, it's going down 30%. Oh, well, that's normal. I'm going to buy some more. Like moves like this, you simply do not have on the stock markets, and especially not on the Forex markets, not within the little time span like we see on crypto.
Yeah,
you can do that with Bitcoin, because there's so many things pushing that, so many fundamentals of Bitcoin, that you could look at it as a safety net, or a place that you can actually hold wealth. And eventually, with the amount of people coming into Bitcoin, with the amount of liquidity going to come into Bitcoin, I can understand why you could do that. With altcoins, that's a different game. Seriously, it's really not. I wouldn't recommend people on many altcoins. And I did a mistake this cycle, because Bitcoin, I did not have any exposure to Bitcoin, and Bitcoin was, at the end of the day, the thing that moved the most. Altcoins have retraced the last 2 months, retraced their whole gain that they've had in 2024, the whole of it. So Bitcoin is still up.
It is, and it's unique. Seeing like a new all-time high before the halving was unique. I still think it's because we underperformed during the last cycle due to COVID. So I would not be very surprised to see an outperformance this time if everything stays normal and we don't have those crises over the world escalating. An outperformer would for sure mean prices over 300,000, maybe potentially even 500,000. But this is something I don't want to bet on. I know, like Jonathan always likes to show this MVRZ score. Like something like this is a good indication when the market is overheating. That's for sure something I'm looking at, or like really at this logarithmic regression, because it's such a beautiful chart. It's simple, it's clean, and it tells you with one view everything you need to know about the market cycles. And distracts you a little bit from the daily up and downs. I mean, in the grand scheme of things, look at this little movement. Yeah? We think now, oh my God, we went down from 71 to 66,000. What a huge move. In the grand scheme of things, it's nothing. So when in doubt, zoom out to put things into perspective a little bit again.
Yeah,
Well
one of the
said.
reasons why I just unwound a couple of positions was I was looking at some of the EMAs on the higher time frames, and it just looked a little bit like we have quite a lot of room for Bitcoin to move down and still be bullish, but for altcoins, for it to do that, you're looking at, absolute disaster. But overall, I think the market's looking good, and stocks are going up. After all of those readings we had last week, stocks shot up to all times highs. So.
Yeah. But we also have to see for stocks, the one thing that's making me concerned is like this rally is the whole last year rally is mainly driven by tech stocks like Nvidia, Microsoft, Apple, and so on and so on. If you take those out of the equation, nothing much has changed price wise. So what goes up can come down again, but then again, people have been saying this about Nvidia since it was at like $200 or $300, and before the split, I think we were like at 1,200 or 1,100 now. Somebody said outperforming during COVID. I meant underperforming during COVID, of course.
Yeah,
to correct.
Yep. We've got news coming out very soon.
Yes.
I don't know how much this news will actually do anything. New York Empire State Manufacturing Index.
Maybe I can put my screen on the 1 minute.
Yeah,
and we can show if there is any effect on the news. We can see in 2 minutes it's coming up, and we'll.
It's not like a super important one, I think.
No, it isn't.
I don't think we're going to see any.
But then again, I said this the last time also. We saw this huge volatility suddenly. So I better be quiet.
Yeah, Bitcoin.
Maybe in the meantime, I can show the EU while we have still about 2 minutes to go. I can show the higher time frames where we are and what we're looking at. Yeah, go ahead.
This is like something I would be really interested. What do you guys make out of the moves like we saw the last days, really? Because I think they were really crazy, out of the ordinary, especially in EU and cable, what we saw there.
Yeah, I think everybody's waiting to see what happens with the elections in France, and I think nobody really thought that was going to happen. So it's a little bit like a black swan event, to be honest. But when you have such fast moves coming down, some of the best trades that I've taken are the fast moves coming back up as well. So that's what I'll be looking at.
I think for in terms of price action, it's just more opportunity. Since if you've been looking, it has broken the structure on the daily on EU with these kind of moves, and that brings more opportunity. I think for us day traders. So I'm excited for what's going to happen with what these opportunities are given by the heightened volatility that we've been seeing.
Mm-hmm.
See, we have 45 seconds to the release of the news. I was going to show the higher time frame, but I think we don't have enough time to. I will do it after the news, and we can see where we are.
I do have a lot right now on EU. Actually, I just got on a small position just with the 200 EMA on the 15-minute, which is basically just above that high. So let's see if.
And that's on your screen. Would you like me to put that on?
Yeah, if we want, we can.
That's a good trade, Alex. Really, we see some overbought moment. Did you go short? Or?
No, I went long. You're looking at short, were you?
I'm going to do the opposite.
There you go. The news has come out.
But it's a bit like limited to the downside also, because we are just trading over the EMAs with 50 N.
Let's go on a 1 minute and see what's happening.
Yeah, the reaction has been quite mute, but it is moving to the downside. There wasn't any spike or anything. It's slowly go, not slowly, but I mean for high impact news, it's slowly going down. Relatively big 1 minute candle, but
touching the 200 EMA again on the 1 minute there also.
Yeah, it's about.
I don't know if the screen is there. You go. It's probably better. Can people actually see that? Because from what I'm looking at on the other screen, it's very small.
It's nice how it bounced off a 200 EMA there.
Yeah.
It is visible. It is visible.
Okay.
From what I see.
On the 5 minute.
And what was the reason? You mean for those EMAs? You're waiting for that?
Yeah, it's, push
of the
higher. Obviously on an intraday outlook, we're not looking on anything. Obviously, macro, it does look like it's coming down for a little bit more. But if we're looking on just the intraday, just this kind of drift upwards, starting to break. You've had this consolidation. You've had, a test of this area here twice. Price couldn't come down anymore. So now we're pushing back up. And that's what I'm looking for. Just that small trade. It's probably a 1-to-1, actually. Normally I like to go 1-to-2, but that is where I would say price is going to be the next point, the next destination in its way. I wouldn't be surprised if we do come up and test these areas. But that is where I think price is going to go in the short term. Let's see if it goes there.
Nice. All right, I will
meantime,
show.
If you want to talk, about your overview on the EU.
Yeah. Let's see where we are in the market. I will put my screen on. Let's look at the higher time frames. Where we are currently, it's obvious to us that to everyone actually that we have been having a lot of selling pressure lately. We have been forming huge bearish structures, all the way breaking even the necklines from a couple of days ago, and it hasn't really stopped yet. And in terms of where can it stop, I'm always looking at the bullish structures, or in other words, structures in the opposite direction for price to stop at. If you even look at the weekly, we don't have any structures, not in my terms in any case, any structures nearby. What we do have is we do have order blocks here, but this one has already been tapped into, or actually hasn't been tapped into yet. I thought it was tapped into, but so it could go there eventually. But before that, we see on the daily, we do have some structures where price could bounce off of. But we haven't reached that yet. If we go to the lower time frame, so in terms of the daily, I still see price eventually going much lower because we don't have any, order blocks being formed, bullish order blocks being formed. So as long as that doesn't happen, I think the price might either continue to go without touching, retesting the bearish structures it has formed recently right away, or perhaps come before, retest them, and then continue to the to those structures below us. Those are the two basic, simple scenarios that I see. But we don't have any idea yet. We don't have any data that as to what is more likely. What I do see is after we have this continued selling pressure right after that spike, very little bullish. Order flow was very, very bearish. There wasn't very little bullishness in that in that price action as it was coming down. So I would expect some kind of retracement before it continues, because it hasn't had really very, very little. If you look at, for example, this consolidation, this is everything it did. This consolidation was, it was just a pause, and after that pause, it just continued to be sold off. So I would expect that buyers at some point are coming in, and it could be this case, at this place. If we look at the H4, let's get that on the H4, we have been finally pulling, drawing or showing bullish structures. We have one from that low point, low swing, and then we retested it as order blocks typically do, and now it is forming. It has formed another one, at least in my kind of way of the order blocks. It has formed a one on top of the other one. So I think this looks good for a move up for the coming bars, H4 bars. But I'm not sure where it could go to. I mean, this is the next on the opposite side, and we have broken this H4, so I need to take that off. Beyond that, we have the daily order block, so it can either this is the place where I would be looking for a short, for a continuation in terms of intraday, but we'll have to see because it's been so bearish that I wouldn't be holding this for very long. And I haven't had a signal yet. I was looking for a signal this morning, but it didn't trigger me, right? So this is looking somewhat, shifting to the bullish side right now, but it's not a lot to go on with. So I'm still a bit cautious about that. But that's where we are, and the news came out. If you go to the lower time frames, yeah, it produced a bearish bar, not very significant. We are already 5 minutes. That's the news bar. Nothing. It doesn't really stand out at all. So I think it was a non-event almost. But yeah, I would say this is shifting slowly, having a bullish stand.
Yeah, so the first position was 0.5%, and now it's come down and it's hit the EMAs. Now I put in another 0.2%. So that's just, gradually getting my full position on, which would be the full 1%. So let's see what price actually does where it's at right now, because, Bitcoin is just tanking. Well, tanking on the lower time frames, but it's still holding. EU is still holding in this area. Still, if it comes down and breaks this low, then I'm happy to get out of this trade, because at the end of the day, it is still, if we look at the higher time frames, it's still bearish. But in bearish, macro bearish trends, we can still get really nice pops up of trades, just of buys as well. So that's what I'm looking for. Let's see if it can just hold that, and if it doesn't, then I'm out for 0.7% in total.
I see. Yeah, I think if it comes back to that, we have a fresh H4. I'll show my screen. We do have that fresh H4, and it was formed on top of another one. So we do have enough to go with look for a long. But I would say if I'm going to do that, I would expect price to come, retest this area perhaps on the H1. And if I see a reversal there on the lower time frame, the 15, the 5, that would be a signal for me to, aim for perhaps this move as it is. Maybe it's going to be not something for necessarily, reaching the target today, but something you could, enter long with a possible this as the target. If we measure, that is about 43. Actually, it's not that crazy of an idea at all within the daily range of EU. So, yeah, 43 is it can definitely be reached within 1 day. So it's at all not too crazy. Very reasonable to expect that.
What are you looking at, Dirk?
I don't know. I'm right now here on the 1 minute chart. I don't like the structure at all that we are seeing here, like this compression of the 50 and 21 EMA. Kind of usually you always see something like this happening before you have a big move in either direction. And I would say at the moment, but this is just a hunch, I cannot base that on anything I see on the charts, I would expect a continuation to the downside more. But it's nothing I want to place a trade on, honestly speaking, right now.
Yeah.
Yeah, it's not very inviting at the moment, I would say.
So it's like also when I look, no, wrong chart, here we go. When I look at this one as a whole, it's like a flattening curve, like as if a trend is exhausting itself slowly.
Yeah.
And at least from my experience, usually that means you are going to have a continuation of the major trend, which at the moment, if we look at the hourly or anything on the higher time frames, obviously is to the downside. But but I mean, we're talking in your case now about a short scalp trade. So of course you could also have the move up first to where your take profit is. Absolutely. Yeah. So I don't want to make you insecure about the trade.
No, don't worry about that. The curvature of, the highs as well, it is, congruent with like, price slowly getting tired and tired, that kind of curvature in price.
Deceleration.
Yeah, the deceleration is really, really nice word to put it. So I can definitely see that on EU.
Let's see, 15 minutes.
On 15 minute.
This is like, for me, honestly speaking, if we see the 50 minutes going up here to 107.21, this is a short I would take right now.
Mm-hmm. See, that's the thing with being so zoomed into the 1 minute that you can get signals from every direction. As soon as you come out just a little bit more, it's that's.
I mean, the chart itself, like 50 minutes, 1 hour, they're a little bit messed up, at least if you trade by moving average, if you use moving average, because of all this price action we saw here to the upside. Just to slump down so massively again, it takes a while until, in my opinion, the moving average display what is normal or what is usual again.
Yeah.
But
what kind of levels are you looking at, Victor? Because I'm looking at it for a potential upside on the EU anyway. Definitely the levels of 738.
As the next level,
that's where you're looking as the level of above. Where have you got that? So your 1 hour, that H4 level. Where is that H4 level at? Let's have a look.
Let me get that zoomed in.
Yeah, so that's around about the same thing that I'm looking
at.
Once we do get a push up.
36. I got it at the order block starting at 107.36.4, or actually it's 36.6 to be exact. But that's where I expect price to be starting to get some. That's a supply zone, so I expect price to be having some resistance there. But if you look at how it I mean, we've been so this impulse has been so hard, so fast that when when it's doing the correction, it's sometimes can also be violent, not as violent as the move, the impulse itself, but if market is very volatile, this order block may not stop price that strongly. But this is the next one. That's the next level that I'm looking for. If I'm going to get a long entry, if I get a long signal from the structures below, which is what I'm waiting for price to come into, and it goes up, I'm going to take at least part of the trade, if not all of it, at that area, because I don't want to be holding this for very long. Looking at the market structure, right? It's clearly that going to the downside is much more easier. Not only that, we haven't reached the daily structure yet to expect price to be going much higher. We haven't reached that yet. So I still think that this could be just a retracement. Let me take that off. Just a retracement before we actually go to there. And how far this retracement will be, that's always difficult. So there's no way for us to know that. But so if I'm gonna just go from one level to the other one, I'm not gonna swing this at all. I know that for sure.
But it's fitting. No, you have up there at 107.38 to 40 also on the 4 hour, the 21 EMA right now trading. I think that's a good target, if you want to be long right now.
Yeah.
Let's pop on gold. See what everybody wants to see on gold.
Let's see.
It's pretty much the same, no?
It is. Although in comparison with the EU, the daily on gold looks a bit more not bullish, but I mean a bit less bearish, because if you look at the daily on EU, I don't see any reason to go long at all. I'm just waiting for a retracement to go short on the daily. But if you look at it on gold, we already touched into a demand area on the daily time frame, and not only that, we did have a bearish structure formed after it, but also a bullish one, right? When we see these structures overlapping, it gets tricky because it's not clear which one is in control. So you gotta watch out when the structures on both sides are very close to each other, or if they're even overlapping like it is right now. So it gets tricky to have a real bias. But in any case, there is for both sides. But in this case, we have on the buy side, we do have the demand area that was reacted favorably, and it formed, so confirming this reaction on the daily, confirming another order block. And I think it looks a bit less bearish, and this could be certainly we are retesting the daily. So this could, if I were to trade the gold, I would be looking for the lower time frames, which I don't see any quasi in here. No, not on the H4. So I don't have a lot of reasons to be going long yet, but you could be, looking for those order blocks for entries. That would be a great area to be going long if you think, if you have more confidence, right? So if you have, this is the H2, and we are in the daily supply zone. That's the daily supply zone is, I mean, if TradingView is cooperating, that is the daily supply zone, and that's where I want to be going, refining that area. If it's going to use this as a springboard, where is it likely to be? What does it need on the lower time frames? On the H4, there wasn't anything, but on the H1, I'm sorry, on the H2, and surely on the H1, you're going to be seeing something there. There's that little area there, which also could be on the lower time frames. If you're scalping or intraday, that would be an interesting area to be looking at because it's so tight. So you get your reason already if it's, if it forms a reversal pattern on the lower time frames. That's a strong area that is very interesting. That where price previously switched to the upside. So I would be looking at that. And on the daily, you do have reasons, you could even swing this a little bit because we do have those daily structures, unlike the EU, which really does not show you the same area. We haven't had any reaction. We haven't reached the demand area yet. So yeah, that's what I would be looking for. It looks better. Definitely looks better on gold.
It's for me always fascinating when you, like the way you explained it just now. It's like before you started, I also had the same conclusion of the daily. Like it's not here, it's not there. I would either wait it to come down more to exactly the zone that you were showing before going long here. And it's always fascinating how you come to the same conclusions with different explanations.
I see. Yeah. It's. I think if it should be used as a confluence, right? You have two. You can use each other as indicators. If you have many indicators saying the same, maybe it's likely that's the case. So, yeah, we could say that's a confluence.
I'm gonna play devil's advocate and just obviously show what I reckon what's going on in gold as well, because I have a little bit of a different outlook. Obviously, okay. I think at the moment we're in a little bit of a range. You've had, this push up, retest, another push up that really hasn't broken this high. It's come down and now it's kind of breaking structure. You're still in quite a little bit of a range. You can see here that we've broken an EMA, and what I would normally look for if we've broken an EMA and we've got like a big gap in this area here, I'd be looking for price to kind of fill in all of that gap as well. So
that's what I
this is on this is on a daily time frame. So for price to actually, it's not like we're trading on the 1 minute where, in a session we can get the results of this move. This is going to take, maybe a couple of weeks to start even showing the signs. But I'm looking at this area as a nice little bit of demand area. And the play that I would be looking at is to wait. If price breaks up above the 50% of this range and starts pushing up onto the top of the range and holds, fine. But if it can't even push up above the halfway point of this range, it shows that this asset is probably a little bit weaker than many people are looking at. So if price, then the move that I'd be looking at to trade was, I wouldn't be looking at going long. I'd actually be waiting to see if it comes down and breaks all of these, breaks the bottom of this range, retesting the top of the range, and then looking for a sell back down to lower levels. And it's still, you can still have a sell back down to these levels and gold still be bullish in a macro sense. But
For sure.
that's the kind of that's the opposite view of what I'd be looking at on gold.
I think it's interesting because if I zoom out even more, I agree with you because if we look at the weekly, what we see is we have we had a strong candle price action or candlestick combination that typically indicate, and that's, let me take this off, but that's this last bearish order block that was formed. That's an outside bar on the weekly. So usually when that happens, that's a strong sign that price will
Bearish
in the
sign.
next couple of bearish sign, very strong bearish sign, that in the next couple of sessions, price will at least move somewhat to the downside, even if it doesn't shoot down, which is also happens a lot. And where does it do that? It gives you that bearish sign at the end of a impulsive move. So it makes sense in the macro, really on the weekly level, doesn't necessarily go all the way down, but I mean a pop at least, relatively looking at that move it made up makes a lot of sense, just looking at that candlestick combination and the place where it gave us that sign. And even if we didn't have that, what we have been seeing is we have a bearish structure being formed. It's not that relevant anymore because we have more recent one. We had another bearish one in between. We did have a let me see, it's this one. In between, we did have a bullish one. So in terms of technicals, it's kind of clear, telling us, okay, there who is taking control on each side on this time frame. And we recently we formed a second order block. That's the last one that was formed last Friday. But did it form it? It formed it after you had that very strong bearish sign. So I'm not too sure to trust this, because if you didn't have anything else, yes, I would say on the weekly we could use this as supply zone to, demand zone to keep on going higher. But with that outside bar, I'm not too sure. I would say on the weekly, I would be bearish, to be honest. Even though, of course, macro structure or the market structure is very bullish, but we're at the end of a move, right? So retracement is only reasonable to be expected. Yeah, I mean,
dollar strong. Dollar strong at the moment.
Yeah, it's and the thing is also, if you see not euro dollar, gold dollar moving downwards, and I think this outside bar, bearish outside bar, is really it's on the weekly, right? Yeah.
Yes.
So it's quite a strong indication that maybe we are going to see price like going down to 2,200, 2,100. You're probably going to see euro dollar also moving down. You are going to see cable moving down. So everything in Forex where you have US dollar in second spot is going down as well, because it's a dollar strength then, and not necessarily a weakness of gold.
Yeah. And even if it retraces into some demand area, it doesn't change the uptrend. The trend
absolutely
will be
not. Absolutely not. Yeah.
On the macro level, the trend is just healthy, retracing. So, and it's making, all those levels that has been broken, coming back into that, maybe just a buying opportunity in the long term. So yeah, I see that. What else? There was something you said that I highly that I like a lot, or I look at a lot, which is, you said if gold is going down, then euro would be going down as well, since it could be a dollar move. And if we look at the on the weekly on EU, we don't have an outside bar as EU as gold, but we did have clear structures being formed. Let me show that. We do have a lot of structures here. maybe I will move them a little bit. We had this order block. It's a bit of, let me get this maybe a little bit more space so I can show it. We did have this order block starting from the last swing high, not the most recent one, but I mean the one before that, and price came into it. And usually that's a good place to be selling, of course. And we formed another one, and after that, after that was that impulsive move to the downside. We don't have anything on the weekly, at least. We don't have anything to stop price all the way, maybe perhaps this swing low, right? And if we look at the higher time frames, we even have a quasi on the weekly left shoulder, the head, and this could be easily where it's going to be targeting for the coming weekly bars. If that is the case, we're talking about a strong a downside potential, quite some pips here. Talking about 200 plus pips in the coming sessions, perhaps, if this is to be the scenario that plays out. So that not confirms, but I mean that's the same direction as what we just saw on gold. If that outside bar is any indication of what's coming, it's going to be the case, then we could be looking easily price retracing to some structures below us. And on gold, there isn't anything all the way down from where it started. So yeah, that kind of gives me a little bit of fear of heights if I were, long gold.
Long.
Yeah.
Yeah.
That's like a bit of a risk-off scenario at the moment, no? And quite a huge one.
I wouldn't be surprised with also you got the geopolitical stuff going on, around the world as well. People are probably running to cash maybe a little bit more.
For sure. This week we have Aussie rate statement tomorrow. For those who are pending on the macroeconomic news for this week, and on Thursday we have the Swiss central bank rate decision. So everyone trading the Swiss and Aussie should have this on their calendar.
So Bank of England also coming on Thursday.
Thursday is the Bank of England as well. Yeah, official bank rate indeed. So that's interesting. And tomorrow we have a CPI from pound CPI. So for us who trade GU, that's going to be interesting tomorrow morning.
Something that I've been noticing a lot with my friends in the UK, they're struggling at the moment. Things are very expensive. They're not going out. They're going out less now. That's also a little bit of an indicator to where everybody's at, and maybe maybe they want to start cutting rates. Maybe it's a little bit, maybe they want to see more pain before they cut rates. But at the moment, you're seeing people be a little bit more conservative with their cash. They don't really want to go out and be spending a lot. And it's difficult. But those are things to look at as well. What are other people doing? Ask your friends if they want to go out. And if they're saying, no, we're just going to relax at home, and they said that for the last 5 weeks, maybe. Maybe that's a time
indicator. a leading indicator for the markets.
Guys, I have to make a move shortly. Need to pick up my little one from the kindergarten. But it was a pleasure being here with you guys again, and looking forward to the next one.
Thank you, Dirk.
To everybody. Do you have a giveaway today, actually? Or?
No giveaway today. We're saving it for the big 40K that is coming up.
So one more reason to leave a like and subscribe to the channel, then, of course.
There you go. Definitely. Thanks, Dirk.
Thank you for your time.
Take care, everybody. Bye-bye.
We appreciate you.
Thank you very much.
So I actually got taken out of EU. I did get back in because I just noticed, obviously, I got taken out, and instantly, as soon as that low, clearly this is the low. If we're looking at the low of that particular move, that's the low, and where my stop should have really been. That's the high. So everything inside here is, of course, the range. So anything
Yes.
in here really could be bought, and it doesn't really break any of the other structure. So I actually made a mistake putting my stop underneath that low. I was maybe a little bit too fast into the position. The stop should be up here, but as soon as I've seen that now, that's when I decided, okay, it's taking me out. It's still within this range. Hit the 50 and the 618, taken everybody that's gone out, including myself, that has had their stops quite in that position, and now it's actually pushing up. So maybe that's the move that I was waiting for. And if we look on the 15-minute, you've also had a nice touch, a better break retest of that 50 EMA. So that's a better position to be in, and that's why I've got in with the same amount of size. Again, so just wanted to make let everybody know
it's
that
a nice entry, by the way, because now price is like deciding which side it wants to move.
exactly.
If I put my screen on, let me see. You did have the close of the bullish on the H1. You did have that close that formed an order block, and where does it form it? On top of that, that retest, that break and retest level.
Yep.
And if we, that's a good, very nice place
a better,
that's
a better entry. That's a better entry than the first entries that we had.
And if you look at it, if you zoom out, it came back, and of course there were many swings. This is not necessarily any specific one. It is the high of the Asian session. So that is I take what I said. That is very relevant. It comes back, hit that the Asian. Let me put it on. That's the Asian high. It comes back. Actually, it was before that. But I wouldn't consider this the Asian high, since this is the beginning of the market, and at swap. So actually this means a lot more to me than the other ones. And if you look at that, that's where price came in before it shoots up. So that's I think that's the move confirming that you have a good entry, and price is doing what it's supposed to be doing.
Those Asian highs, gotta love them. But let's see if it can push up, obviously, because you're still in a little bit of a range. So not the biggest range.
It'll have to
like a 1 minute range maybe, but still a range. Let's have a look at the Bitcoin position. My Bitcoin position is bleeding me.
Your Bitcoin position?
Yeah, my Bitcoin position is bleeding me.
I'm still. I was asking Dirk for the viewers, but actually also for myself. I need to confess, because I want to be going. I want to put some more positions on long-term positions in Bitcoin, and I'm waiting for that. That perhaps move to the downside before we continue up.
I think you've got it. I think you've got it. I think a really nice place. I think where Bitcoin is going roughly is around 60,000, maybe 61,000. That's why I kind of adjusted some of my exposure, because I can see that it is pushing down, and even if it gets to 60,000, it's still in the range. You've got that deviation. You've got it's still bullish, and it's totally fine. So.
Yeah, I was looking for him in terms of fundamentals, since he knows all the background insights about Bitcoin. But on the technical side, I think this is a great place to be. Just looking at the weekly order blocks, these are the places that I would, based on what how I read the market, those are the places that I would be interested in buying. If I want to be putting more position on for the long term. I mean, type of investment type kind of trades, holding for months and even longer. So that's
I would look into an ETF, though, to be honest. I'd look into the
I was that is my
you're
my,
looking so you're not looking at buying the spot
no
Bitcoin, you're looking at the ETF.
Yes, ETFs, since this is for long term, so
Yeah.
ETFs for
Super
I think that's the best
automated,
way.
super easy, super. Yeah, I agree with you 100%.
Yeah.
We got that little push up on euro. See, now that's what I wanted to see when I got into that position. That's what I was looking at to see here, but again, a little bit premature, because that was, that is the low of that. So all of that has just come into the 50% of that move, and that's just, that's bread and butter setup right there.
Yep.
Gosh, I've been so focused on other assets. I just forgot how nice trading FX is. I haven't traded FX for a while, here and there.
For how long now?
No, I've been getting in little positions here and there, but when you're focused on a certain thing, to go and then, break your focus and start day trading something else is, it's like if you're day trading crypto, you're not going to then just start day trading euro. If I'm only trading, if I'm day trading and I'm only trading Forex, then I'm only trading euro and pound. That's the only things that I'm looking at, and I don't look at anything else. Just because I'm on the low time frames all the time.
Yeah, I understand. Yeah, I don't switch asset that often. Actually, I rarely do that. In terms of, I stick to my EU and GU, and I may take a gold trade from time to time. I may take scalps on other pairs, but on my main strategy, I just stick to those two majors, and I just to keep that routine and that consistency in, because I know all the things by heart, the ranges, the levels, and so it's easier.
You get used to it. You get used to that asset.
Exactly.
And people say there's no such thing as characteristics in assets, but I don't think that's true. I do feel like some assets have specific characteristics. 100%.
I agree. If you look at for example, yen pairs, which are typically more volatile, they will usually not respect order blocks neatly. They will have wicks on squeezing the order block more often than not, and that's a difference. And that's a quite important difference, because if you have your stops on top of your stops on the other side of the order block, it makes a difference if you're going to have a wick taking you out and then move to the other side.
Yeah.
So it's, for my strategy, it's very it can be very pair dependent, the asset dependent. It's since I have tight stops, it has to have a similar like AU Aussie dollar is Aussie dollar against the US dollar. That is something that I can use my strategy without changing too much from EU GU to go there, because the volatility is similar. But if I go to the yens, my win rate drops. I need to make adjustments for it to work, because it will still respect the order blocks, but it will do it in a different way. And so I certainly agree with you that certain pairs have different characteristics, different behavior, I would say, for sure.
Yep.
There is someone asking if any way I can review what invalidates an order block according to my strategy. Yes, for sure, and it's very, very easy. You can have any rules, because nothing's stopping you. But what I simply do is, you could have, for example, that price does not go beyond it. Let's say let's put an example. You have this order block, and you would say, as long as price, not even the wick, doesn't go beyond this low, it's still valid, right? But that is, what I've seen is, if you look at price action for a long time, you see that a wick is not as significant as a close. So a wick I can tolerate, I can forgive, but if it's a close, personally, I say, to me, I need to receive the signal. That's invalidation of that order block. I know it's a bit arbitrary, but the thing is, you have to agree at what point you consider that an invalidation. And to me, that's the moment I I consider it invalidated when there is a close in the same time frame on the other side of the order block. So if it's a bullish order block like this one, a close below that low, even if it's 1 pip in my book, it's invalidated. I take it out and I don't use it anymore. The idea is if price is able to close there, then it's not strong enough. It's not that relevant enough. And a wick can be news spike. A wick can be a few seconds, and it's less. Even the close, of course, is just one moment in time. But if you look at price action a lot, you will see that the close is very significant in terms of the signals that other participants are taking out of it. A lot of times you will see price going in one direction and maybe 5 seconds before the close, and that can be a 1 hour bar, even 10 seconds before the close, it will move all the way out, the other way around, close within or outside that whatever structure, and then move. So it means that close, apparently it's very significant. I don't know why. Maybe, I don't know, maybe they know that a close, is used for algorithms a lot, and that might trigger, I don't know, algos taking shots at the market, perhaps. And I don't need to know, but what I do know is that the close is more significant than just a wick. So the close is what invalidates a structure for me, an order block, I mean. Yeah, price is very nicely shooting up. So I didn't get a signal to go long, so that's why I'm not in. But you're still in, right?
Yeah,
Alex?
it's about to hit take profit. It's
What
funny
was your
because
TP? Is it
my
this?
TP just a little bit higher, but yeah, basically.
Okay.
It's at the 200 EMA on the 15-minute, which is at. This is a nice place to close, though. I'm going to close it right now, just because it's. I've just closed that just because of the pure fact it's at an FTA, which is a first troubled area, and I've just no need to push it just for an extra 2 pips. So might as well close it. Then again, those 2 pips, I keep saying this, those 2 pips on a big sample size is actually a lot of money. So I shouldn't actually be doing that. I should be just letting it just go. But what can I say? Henry already knows what happened to let your runners go. I agree, man. I agree.
I would well, it's something personal, of course, but since the let me check the the ATR, but the ATR for EU is currently at 33 pips, and the average is at 70 or between 70 and 76.
But that's after such a big volatile. It's not normally, surely it's not that much.
Of course, you have to compensate for that. We have come from a very impulsive market, not necessarily going to happen today again, the same as impulsive as it was before. So you shouldn't be expecting 70 necessarily today if there's no news coming up or any other catalyst. But you can still assume that it can have perhaps go to 50. And the question is, will that 50 be the expansion be? Will it be on the downside? That will be another 20. Will it be on this side, right? So that would be visiting that swing low, or would it be the other 20, right? To make it 53, would it be on the top side? And the top side, it coincides with the next sell area, which would fit nicely in where price could, go another 20 pips and then stall there or reverse or, do whatever it's going to do, but not continue further. Not only that, if you look at the that's a case to be made that it'll keep on grinding up until reaching perhaps this area, and maybe even before that start decelerating, because now it's accelerating. It's if you look at it, this is an acceleration. This is not it's not stopping. I mean, you got a nice nice market structure now. By no means it's decelerating yet. There's no indication of that.
Yeah.
But you got a nice profit, and that's always good.
Yep, in and out. I keep saying that I want to turn into swing trading, but my personality really doesn't work for swing trading. I really just like being on the lower time frames, and I'm much better on the lower time frames.
And that's
getting
because
used to the 5ers
patience?
BTC difference. No, it's just yeah, probably patience, but also I don't sleep well when I've got positions opening. I tell you what, having that position on BTC overnight, I woke up in the middle of the night to check it, or then the other day I had the same thing. I was waking up in the middle of the night just to check where the price was, and it's just awful feeling.
It is. And that's a sign back. Actually, it's a sign that you are either over leveraged or
definitely. That's the problem. One of the reasons why I actually stopped trading Bitcoin, futures, crypto futures, was because of the leverage back then, and I've kind of got it back into the old habit, unfortunately. But that's okay. That's all right. Getting used to the 5ers BTC difference. Yeah. So Victor, but I wouldn't trade CFD crypto, man. Seriously, the spreads are wild, and you don't know what the LP is going to give out on quotes, man. You really don't. You could be in a great position. You could have a liquidity grab, which is very, very, very normal on crypto, to give the most pain, find the liquidity, and then go back the same direction. It happens all the time. That's an asset that I would say definitely has a characteristic of finding liquidity and then moving after. So once it hits all of those, all those orders, or hits a bunch of liquidations, suddenly you've got a massive spike in spread on a CFD broker. Your stop could be $500 away and it will still get hit. Honestly, it's awful. So I wouldn't even recommend it. Even with us, I wouldn't recommend it. Just trade it on futures if you want to just trade it anyway.
That's some honest advice there.
Yeah, there you go. It's a nice push up on euro. Is there any
guys,
Sorry, Victor, what were you gonna say?
No. I was gonna say, don't forget to hit that like button if you like this stream.
Baby.
If you want us to enable us to be able to keep on bringing good values to you, keep on bringing those guests that may share those good insights, hit that like button and sponsor us.
That's it. You heard the man. Come and trade with us live Monday to Wednesday.
Indeed.
We're gonna beat up those bears. Wow, cha-cha. Do you know something that I do want to try though, Victor?
Go ahead.
I really want to just take time, or take just a challenge for myself, just to only take shorts. Because with longs, I'm really good at longs, but shorts, I really struggle seeing shorts. So I might take that as a challenge of just going shorts, using the same methods I use with my EMAs long, just the same way shorts, just see if I can train my eye doing that. Because there is a thing where some people can really only see one direction for some reason. I see that in myself.
Yeah. I think it's a good exercise. I think it's a great exercise because you're deliberately training your eye to do it. Otherwise if you're looking at, for example, with Forex, it ranges, it doesn't always go up. But with crypto, you may tend to have that bias to the upside because it typically, on the different time frames, it will go up, the same as equities. It keeps on going up and up and up. So it's easy to fall into that standard bias to the upside. And and that, I think it's a good exercise for sure. Yep. Are you starting it soon, or is it something still in the development phases?
No, I was just thinking about it. I do what Henry says. I do invert my charts quite a lot, but sometimes it's better, instead of just inverting your charts, just get used to seeing it. Get to actually consciously just look out and just think, okay, instead of getting into this position right now because it looks long, maybe just put yourself and try and see the position as if you were going short. So I might just I'm thinking about it, but I might just try doing that only shorts. But I'd only do that on a demo account, just like an evaluation account or something. And I wouldn't do that on a normal account. Is anybody got? Oh, sorry.
Yep. No, go ahead.
No, I was gonna say, guys, Victor's just gonna go through this question, but put in the charts as well, the assets you want us to go through. Maybe there's a couple of charts you want us to look at, stuff like that.
By the way, EU is seem to have put in a very local top. It's nothing really, but on the 1 minute, you do see some kind of reaction from that 720 level, 720.9. So who knows? That makes your exit very nice right now. But in terms of the intraday, I still think it should be able to continue to go to perhaps what I mentioned, which was the beginning of that order block, which is this area more or less. And there is a pivot point above at the upper side of that order block. And I like when you have like those confluences that have nothing to do with each other, because the pivot calculation doesn't take order blocks, of course, into account. And when you so that I like when you have that kind of confluence that is that tell you that in the same place price will have some kind of difficulty when it gets there, if and when it gets there. So that's a great area to have as a target. But hey, we'll have to see. Price doesn't seem to be having a lot of enthusiasm, but it's, who knows? It's still moving. If we look at the moves, they're about 16 pips each time it has those sort of impulse-like movement to the upside. Let me get that straight. Now let's start from the first one. This, if you consider this whole thing in one, that's 22. We have another one, which could be considered around 22 as well, if you take that swing high. And this one is 16. So there's actually a deceleration in terms of the amplitude of each impulse. This you can know that this is the top yet, because there's not enough information, but it's only 13. Before it was 16, so that would put the impulse to be expected at least around this area. And if it's lower, that's another sign of deceleration, because it's going from 22, 16, and if this is going to be the top, would be 13. So that's one way to gauge 13.9, almost 14. That's one way to gauge the what the market wants to do in terms of by looking at how far each impulse is. Is it accelerating or decelerating, or is it having the same kind of distance or number of pips each time it pulses? It has an impulse in that the same direction. All right, someone is asking, do you require a quasi to confirm entry on an order block? Like no quasi with order block, still no entry, or not really? That's my strategy. So you don't have to necessarily trade this way, but yes, I use order blocks and quasis actually on the higher time frames, which allow me to identify an area of a couple of pips. Can be 10, it can be 15, it can be a little bit more than that, but as tight as possible. And that's the point or area of interest. And in that area of interest, I need to see reversal patterns. And personally, I use the quasi as you could call it confirmation, but it's on the lower time frame, and that will at least that will be my signal for me to go, to enter or use that order block. Let's say the H4 or the H1. I would go to the minutes, see the reversal pattern, and then that will be the idea. I can actually, perhaps I should show it. Let's say we have this order block. I think it's a great area. Let's say I identify this as an order block, and I have more reasons to be buying this order block. What I then do is I look to refine it, make it as small as possible, because right now we're looking at 24.4 pips, which is not that tight if you look at EU, which has around 60 ATR. So that's about more than that's about 35% its ATR. That's a lot. So I would be looking for something smaller. And in this case, there isn't. There is this H2. But I mean, I'm gonna be looking for something much tighter, and it doesn't necessarily have to be, touching the wick as this is. It could be something like this, right? It could be something. This is not existent because the order block is much wider. But I'm looking for other time frames to help me refine that area of interest, and then I go to the lower time frames. And if I have it here, right, that is the area of interest, and I like to indicate it with some kind of lines that I don't get confused when I zoom in, right? Something like this. But I mean, you can do it any way you want. The idea is just that I'm very aware that this is the area I want to see the market react, right? In this case, a reaction. This is not actually the area because there is nothing to the left to give me this idea. But if there were, this is an example, and I would be looking for that quasi price going, making lower lows and lower highs, and then at a certain moment break that neckline, and then that is the activation. So that's the quasi, and I wait for that reversal. And all of this has to happen in relation to the area that is of interest to me, which is based on the higher time frames. And that's where I get my entry. And if it works well, I would be putting my stops. I would be entering, when I get my signals, I have different rules for the actual signals where I enter. And I would be putting the stop either below that swing low or below the head, depending on certain rules, and targeting structures ahead of above us or above me. In this case, something on the H1, something on the H4, or for which I have a couple of rules as well. And basically that's it. So I use the order block and I combine them with quasis on the lower time frames to confirm that the area that I think might be a place where buyers will come again into the market, and they will actually have to come in the form of a quasi, because that's how quasis are formed. They are formed by buyers coming in, because in terms of the structure quasi, it is if you look at a bullish quasi, right, you have by the market structure of it, the sellers are in control, right, because you have a clear trend, in this case to the downside, and there's no way it can break the neckline unless there's a shift in the market participants in terms of who is in control. It's the buyers need to come in. There's no other way. That's what we're looking for: the break of structure, the break of that neckline, and then when that happens, that's the sign that the buyers are actually in control and no longer the sellers. Then I wait for a retracement to get a good price, a tight stop loss for the continuation, because I expect now after that move that it will be continue to making now higher highs and higher lows in terms, because the buyers are dominating the playing field. At least that's the assumption. So yes.
Yeah, super nice way of trading. Definitely.
So let's
have a look. I was gonna do a quick. So somebody just asked, what do you do entering after a breakout? Can you look at gold because it's just broken out? So I'm just looking at gold right now. And what I would do after a breakout really is just a retest of the highs of that particular move. You see a double bottom here is, you've got, you know, it's got this kind of structure. You got that double bottom W, or, you know, whatever anybody wants to call it, doesn't really matter. But now you've had that breakout, I would actually just wait until you have a retest of that area. If you want to be more aggressive, you can get in whenever. Obviously, thinking if you're going to get in right there, then you've got to obviously put into account that if you put one lot on, you're going to be risking 760, which is still within. It depends on your risk management and what you're doing, but I would personally wait until it retests a prior level. Gold likes levels. So you got that level right there, which is coincide. You got this level where you've got, why does MT5 keep moving? Where it's been support and resistance. It's been resistance here. And you can see it's been resistance here. So this is quite a nice level where if you wanted to go long, you can go longer. Then you've also got a 50 EMA, 50 fib right there as well. So that's how I would get in. Doesn't actually look like a bad trade because you've also got on a 4 hour, you've got also that kind of break, retest of those EMAs and push up, and the top as well. You've got a 200 EMA, which would be attracting price. On top of that, you also have your 50 midline of the range as well, which is also a place where a lot of volume takes place. So the kind of balance of volume, and the most volume is done in the center line, then you could also trade towards that if you wanted to as well. It's not actually a bad trade. Could get into it with a small position. Am I tempted to get into another one? I don't think I want to get into another position, but that would be a really nice position to get into. Let's see what actually happens with that. With AUDCHF, it's quite an interesting one as well because you've had a really nice push up. This is on a daily as well. So you've got obviously this high, and now you've got that low. The reason why I put this support and resistance in that particular area is because obviously I can see here that's where we got the close of that candle. So you had a massive push down. I don't know why MT5 is freaking out, but you've got a massive push down, and now this candle is closed on that particular level. So I'm not really looking at, I'm just looking at how much demand that came in after this candle. So obviously the market opened, it's found demand, and then it's pushed up. So I'm looking at that level as being quite a strong support and resistance. You've got it here, support, resistance, sorry. You've got it all over the other side as well. Oh my gosh, MT5. You can call that support, resistance. So that's quite a big level I'm going to be looking at. The only thing that I would say with this, I'd actually be looking at this going bearish, to be honest. If we have a look at the 1 hour,
that's Aussie Swiss, right?
Yeah, that's Aussie Swiss. On the lower time frames, to be honest, I wouldn't look at shorting it right now, to be honest. On the lower time frames, I'd actually look for a long on the lower time frames, maybe back to that area there. If we're looking at the 15-minute, you've got this that's what I'll be looking at, 15-minute. But overall, I'll be looking too short. So areas really to short from. So maybe could be a nice area to short from. Yeah, not sure with that one. Gold, there you go. So you got a nice push off with gold as well. Yeah, definitely looks. NAS 100 looks short. Whoever's short in that. I'm not too sure with indices like this, to be honest. I've never actually traded them, but because they're relatively mostly long, this is NAS 100, so the Nasdaq. But they're mostly long. When you do have these short opportunities, they're very fast. Look at that. It's super fast. That's on a 15-minute as well. Oh God, what's my Bitcoin position? I don't know. Yeah, well, that's yeah, well, that's disgusting. Absolutely horrible.
All right.
What were you gonna talk about?
Yeah, someone asked Haresh ask about Euro Pound.
Yeah, I've got that. I've got that on my chart as well. So you had this gap. I was looking at this gap here as well.
Okay.
Again, you've got this quite, this area of. I would say, to long it up to this direction, or just wait for a short up here. But then again, you've got pound interest rates coming out, so you never know. If they cut interest rates, then things are gonna shoot up.
Would you be trading the close of the gap?
I'd be trading. Yeah, so if we go on, where is it, on 1 hour? To me, the top of this here, that's where I would be looking if I was trying to get into position. I wouldn't be trading to the top of that gap. I'd be trading the how would you call it?
The opening price after the gap.
Yeah, exactly. That's where I'd be. That's where I'll be looking just to take off any positions. Don't know what's going to happen.
Not the close of the whole. Not the close of the whole gap.
Some majority people would go for the close of the whole gap. Yeah, obviously there's the big saying that gaps are meant to be closed. And obviously you got interest rates on pound as well. So let's say if they cut rates, then you're going to see this shoot up. And then it just looks on a technical level, it just looks like it's just, closed the gap and it's pushing up. Who knows? I just don't trade these things.
Yeah, I don't either. But if I look at Euro Pound, I mean, what I see is that we have been, since some time now, we are in a bearish market structure, and this was a retrace from this move down, right? And we are in another impulsive move from this swing high. We had that little move to the sideways, but actually it didn't do much, and it didn't change. It's basically all bearish in my mind. This is just a pause, consolidation as it continue. But what we do have, what I think is significant right now, is that we are now testing this daily order block, right? If it is able to close above it, that starts to change things from what I just mentioned, that price were predominantly bearish. And if you go to the lower time frames, because if price was going to continue on its path to the downside, it shouldn't be breaking bearish structures. It should be testing them and forming new ones. So if it breaks it, that could be first test today, like the end of the day price, how it closes the daily. You go to the 4-hourly, I already see, of course, this candle, if I'm not mistaken, is an artifact. So you should not pay attention to it. Well, it's a gap that was closed, could be, but I think it's the spread of the rollover time. So if you look at that, what I see is we do have a very nice order block on the H4. That already I like, and we do have this nice quasi being formed, right? You could say that's the low point, that's the low the trend, downtrend, and now we're breaking that neckline. So now it looks, you have a couple of things telling you that maybe price is switching over to the other side, just as I explain how, with that little diagram, how it changes, break the neckline and starts going up. What I would be looking is, of course, for price to come back to some area of where the buyers came in. And I don't see any other on this time frame other than this H4 order block. So you don't have to, that should not that's not necessarily the only buy entry area, but this is to me the area that I would be interested in as it moves up to a structure on the opposite direction, which is it's leaving. Well, in this case, it's an H4, so that I would be looking for the H4 here. But since we already have an D1 order block, right, I'm going to not press my luck. I'm only going to be respecting that daily, thinking this daily is already able and capable of, reverting price back to the downside. So this is a very nice example of how I trade. This is the H4. I would wait for price to come to that area, and I would go to the lower time frames to find that reversal pattern, as I explained, once it gets there. Because if it's going to reverse from this order block, right, that's the idea. It's going to show you signs. It's going to have double bottoms. It's going to have quasis or what have not. But reversal patterns, in any case, it has to. There's no other way for price to reverse without reversing, and it reverses in patterns. So that's the idea. I would be trying to catch something as tight as possible and targeting either this structure, or if it leaves a structure before it comes down, we could be targeting that structure, which future prices, because it hasn't shown us yet structure. But all of that is dependent and conditioned to the fact that it needs to break that daily, because otherwise you don't want to be going against the daily. How many pips on average do you allow to go into drawdown before you realize you got the trade wrong? I don't let the drawdown tell me if I'm wrong or not. At least for me, that's going to be my stop loss. So I'm going to have, based on the structures, where it should not break. If it's breaking it, then it's over. In this case, we're on the H4. This is the structure that I'm going to be using. But of course, the entry is not based on this structure. The entry is going to be based on the quasi on the lower time frames, right? So if you have this, right, assuming I'm painting it, I'm drawing it a bit big right now, but assuming that the idea is it breaks the neckline and then comes back for the retracement, that's where you want to be getting. In that case, price should not, let me get this, price should not be taking that head out, because otherwise it's not a head, right? This is the whole idea is that it's forming a left shoulder, a head, and you're trying to catch that right shoulder. If this is going to go much lower, then the whole structure, the whole quasi is non-existent. It's invalidated. So your stop in that case could be the place below this. That would be the stop. And as long as it doesn't take my stop, I've got nothing to do. I don't gauge the drawdown, to tell me if I'm wrong or not. If it goes there and it takes me out, then there's nothing there anymore for me. So I let the trade take me out, and that's it. If it takes me out, then I'm wrong, and up to the next. Right. So let's see. So that's going to be interesting for today. If EU, Europe, pound, how it closes, and depending on that, it could be something we could look tomorrow at. I will write it down, since it's not a pair that I trade. Tomorrow, perhaps we can visit this trade and see if it closes up, then we can look for those areas, see if it comes back to the H4, and maybe we can have, we can follow up on the setup. And the nice thing is we do have that gap. I don't trade gaps, but I know a lot of people, gaps, especially in the equity market, gaps are very popular. So, and the idea is that gaps, they tend to be closed. In other words, price tend to reach the, closing the gap, meaning reaching that area, which is, this is the top of the gap, of course, and this is the bottom or the beginning of it. Let's see, the opening price after, the opening price after the gap is way below, but the upper wick, this is the gap, and it tends to fill it. and people have all kinds of. You can look up all kinds of data on how many times it does it, what time it does it, and you can have a trading system based on that. There's a lot of people doing that. I don't do it, but it's something very popular for a lot of traders. All right, so let's check the the chat for more pairs, perhaps, or some other requests, or perhaps some questions, interesting questions for everyone else. Remember, guys, we have a great community in Discord, and we have some exciting things for you. As always, we are still trying to improve. The community is already a great place to be if you're focusing, if growth is important for you as a trader. But we are still trying to look for better ways, improve what we already have, and bring new initiatives. One thing perhaps I can share, you guys, we are working on a workshop of a great trader, Rich. He is going to be starting soon with a workshop on strategy building. So if you're interested, you don't have a strategy yet, or perhaps it's not, giving you the results you need or you want, join us, join our Discord community and start that workshop. It's going to be starting soon. So be part of it. It can be learning a very important skill, how to build your strategy, how to look to assess if it's profitable or not. What do you do? If you want to know all about that, join Rich's workshop on strategy building, which is coming up soon in our Discord community. So great stuff for all traders. I like your background.
Thanks, man. I'm gonna give myself a high five.
Nice. Let's see. Let's see what we have with the chat. And there's another this question that I just answered. How many pips? There is something I didn't mention. That is, where do you put your stop exactly? Do you put your stop at the end of the order block? Do you put it somewhere below it? How much space do you give it? And that's something that is, I think, pair dependent. If you were here at the beginning of the stream, we talked about the different characteristics of each pair, and one of those things, those characteristics, is how wicky a pair is, an asset, right? If it's pound yen, it's going to have different, typical wicks, much longer than other pairs. And if that is the case, then you need to adjust your stop loss to the pair, because if you have it too tight to the order block, it can wick without invalidating it, without closing beyond it. It can just wick you out and then go the desired direction. So that's something you need to, and it depends. It's pair dependent. So you have to do some testing to adjust how you can measure it. And after, I don't know, 50 trades, you see, okay, those times it did work out. How much did I need in terms of leeway in below that order block if you're going long, right? And if you can answer that with enough data, then you got yourself a new rule for your stop placement. I think that's the way to approach that issue. Let's see. Someone asking here, have you ever factored in ICT round numbers to your trading? I'm not an ICT guy, so I'm not sure what is ICT round numbers. I see there it includes round numbers, so I guess it has round numbers. But I don't use round numbers. I know the market typically gravitates towards them. I don't know if ICT round numbers are different than just round numbers, but no, I don't use it. Yeah, I don't. That's the short answer. I'm not sure how well they work, but round number in general is typically, you will see some patterns, price going there, while in a retrace as it continues, or it uses it as a supply and demand, or resistance and support and resistance. So you could build a system around round numbers, and I think a lot of people use them. I think Yanis, I think, mentioned round numbers, if I'm not mistaken. So he uses it as a confluence, if I'm not mistaken. So I think it's a great place, especially if you have. To me, it's like a tool in your toolbox. If you depending on the situation, you may use it. I would do. That's how I use pivots. I use pivot. I don't use them. My strategy is not based on pivots, but I will use them at targets, because if it has confluence with the expected range for the coming session or coming day, and I see a pivot right there, and I know that price will respond to that pivot. It makes sense to me, to have my target in relation to that pivot, not way beyond, but before the front run that pivot, because I know that could be a place that price could reverse, and I want to be out before that happens. So CAD yen. Did we look at CAD yen, Alex?
We didn't have it. No, we didn't have a look at CAD yen.
We didn't. So we could look at that. Why not?
Go for CAD yen. I did get into small position on gold, even though I said that I wouldn't, but it came down to an area that was, relatively high risk to reward.
Okay.
And if I get taken out, I'll get taken out for 300.3%, but the upside is actually quite good. So it was actually that position that the guy, I can't remember who said it in the group.
Okay.
I'll share my screen and we can just look at what price action is actually doing, and then
gold you're talking about, right?
CAD yen. So yeah, obviously we had in gold, and then you can go through CAD yen. Yeah. So we were talking about how you can get in on a breakout. Obviously we had the top here, and this is where I said that person could, you could wait for price. MT5. You could wait for price, break up, come back down, and then get it on that retest. So it's pretty much done that. Obviously, you could have waited. You could have got into it right on that EMA, but it's actually come down. It's hit now all of this area. It's also hit the 50 fib.
EMA? Oh, fib.
The 50 fib, and you've also got all of these EMAs, which is in the center of all of this volume as well. And it's relatively close to an invalidation. If price comes down here and takes out this, I'm wrong on the position and we're going lower. So to have, $400 risk, and the reward is, we're looking at, 1,000, just over 1,000. The reward is quite low. It's quite low risk for a good amount of reward. So that's why I took the trade, and it looks as well on the 15-minute. It looks really decent. You've had the area where you've got the 200 EMA. You've got all of these EMAs, all of this volume coming in. You had a breakout, a retest, and let's see if we can get that continuation up. Continuation up is going to be at the center of that range, and that's going to be the magnet, which I'm looking for price just to return to, and I'm going to obviously get out just before that level, and we'll come back to it after you go through CAD yen and see what price has done.
And the center of the range, where's that in your screen? That's not the TP, right?
No, it's not the TP. Center of the range, the overall range, I'm looking at 2335. So 2,335.
35, okay.
Which is the center on a day.
I see.
Looking on a daily,
Yeah.
So you had that.
Yeah.
A lot of
it's
volume.
The 50 fib on that big impulsive move, which makes a lot of sense. And there's also a EMA there that could be all it needs for, to switch back to bearish.
There you go. Exactly. You know how I trade now, huh? You just know how I trade. I don't even have to talk about
it. Yes. Let's look at excuse me. Let's look at pound. What was it? CAD yen.
CAD yen.
That's not a pair I typically look at, so I would have to check on the higher time frames just to get a reading of where we are in terms of the big panorama. We are in a monthly supply area, but it's very, let's see, we do have a quasi on the monthly, which doesn't happen very often. So I'm very keen on looking at this. I know you guys probably are not looking at the monthly, but this is the entry order block for the monthly. It doesn't happen very often. Let me take this away. Actually, it's one big area, so it doesn't help us. It's the entry order block is all of this area, so it doesn't help us in terms of refinement. But this area would be a great area for a short. I don't have much historical data on this price feed, but that would be in terms of quasi, right? I don't know, and this is the monthly, so I'm aware of all of that. But in terms of the setup dictates, if it gives me a reversal pattern, giving me an entry on the lower time frames, I could be targeting based on the order block all the way to the lowest point of that range. That's the last TP, or anything in between, any order block in between. And you could easily be targeting this, because this is like as it is getting out of the order block, typically it moves a lot more than just the order block. And I would be targeting something like that. And of course, my entry would be way, way much tighter than this. This is 300. Remember, it's the monthly. So that's one thing that I see, but it's not relevant right now yet, since we don't have any reversal, any transition to the downside, right? Before it goes down, it needs to transition from bullish, where it is right now. It's breaking. It broke all those bearish structures, and it formed. It's so far it hasn't tapped. It did have an immediate reaction, but it didn't tap it after some time. We have bullish structures forming. That's in the monthly. The weekly is firmly. Let me get all of this out of the way, because apparently I analyzed that in the past, and that's a reversal pattern that did not. Maybe I should leave it so you can see. This is the neckline, and in this case, I know this is a long time in the past and it's not relevant anymore, but this is the area, right? That's the entry order block on this quasi. And even though it did not work completely, going all the way to the last TP, right? That is the left shoulder head, and this is the potential right shoulder. You can see how it does react to that order block, and that's why I trade the way I do, because price reacts to it more often than not. All right, so we do have on the weekly. What do we see? We have a bearish order block here. So there's some sellers coming into the market, but we're not getting that follow through yet, right? So it did have that move, and it should, right? Based on the weekly, it should have resistance here to the downside. We did have a small rejection here. So we do have maybe sellers piling in. Well, not piling in. Maybe they're knocking on the door. Let's see. Okay, so we do have some area. We are in a monthly supply zone, weekly supply zone, very, very wide. And we did form that. Okay, so now we know the bigger panorama. If you look at the daily, this doesn't look exactly bearish at all, not because the neckline on this, well, let me see, this would be the neckline. So to me, this whole structure is just on its way continuing up, at least on the daily. I don't see that reversal yet. What else can we see? If we go to the lower time frames, of course, you have this order block on the weekly, and it's also on the daily. So I like that. That may be more relevant for that viewer who asked to look at that. We do have an order block there, right? Not considering this, what's to the left, but I mean, what's more immediate to the left. We have that weekly order block, daily order block. This is looking interesting, and I would be looking for a reversal from this in terms of this quasi, right? This is interesting to me. if you take the market structure from this low, what do you see? Right? It actually, you would be, that's not a good one, to be honest, but you can still, if you consider this to be the head, right, and this then the left shoulder, this, you could be expecting that right shoulder. If that is the case, then the next question is, where should I be, where is the area of interest? There you go. That's one on the H4. And you got another one up here. Very obvious to everyone, I think. There it is. Those are the two areas where that price could, and the first one was already reacted upon. That this move, that is this, hold on, that's this wick. So I'll be interested selling this area. Perhaps I should put some lines there, something like this, on the lower time frames. Those are the areas that I would be looking for a short. And let me get that in. Something like that, right? They're not very precise because I'm not putting them exactly there, but you get the point. Those are the areas that I would be looking for because I have reasons on the weekly, the daily, and also the H4, and that's what you need for, to put the probabilities in your favor. So I would be looking on the lower time frames to see reversal characteristics, reversals, candlestick patterns, or reversal patterns in general in this area, these two areas, as prices coming back to them. And if you do, you could be targeting anything, any structure below, all the way to that swing low. That would be the last TP, I would say. But since on the higher time frame, it's not necessarily macro bearish yet, I wouldn't be waiting for price to reach this. I would be just taking maybe this low, maybe this order block, or some other structure that I see on its way going there, because it's likely, that I might use it on its way continuing up. I don't think this structure necessarily is going to reverse, the bigger structure, because the bigger macro, it hasn't switched back. It hasn't broken the neckline. So it's likely that even if it moves down, eventually it can continue to go on. So yeah, I think the pound, CAD yen is I think is a great pair we can be looking for an entry in the coming days. I wrote it down the same as Euro pound, so we can be, keep an eye on it for future streams for sure.
Yeah. Let's have a look what's going on. Gold looks
How is
like
your
it's
trade
holding.
going?
Which one?
No.
Which one? Gold is holding. Bitcoin is absolutely tearing it. Hopefully we can find a little bit of support so I can get out on maybe a nice retest.
Yeah,
because I'm underwater on that one big time.
Bitcoin does look very weak.
Super
yeah.
heavy.
Yep. It just broke that daily order block, and it's doing it while forming all kinds of bearish structures. The outside bar there, you don't want to be seeing that going long. That's outside bar, and it formed another one. It retested it very nicely with that wick, continuing down, and formed a even bigger one. And that's all doing it while getting into that demand zone. So it's coming in, telling that it's very aggressive again, and it closed below it. So this order block is already gone. Yesterday, Friday's close took it away. But even if you leave it on, you will see that the price comes back and retests from below. So it flipped into now it's a resistance area.
Yeah.
Now it's a supply zone. Right? Price.
Yeah.
Okay.
It's super annoying because I made quite a lot of mistakes when trading BTC recently. It's like little like amateur mistakes that I'm it's just one of those things, but I'm still into that position. We'll see what happens if I can get just a small bounce. Closing it right now is probably I can probably save a little bit, but it's just one of those things. On to the next one. With regards to gold, we're gonna see what happens if it's holding right now. Obviously, let's have a look at the Dixie quickly. I think we're going to get another push up on the dollar, so that means obviously gold and everything against it is going to go down. If you have a look on the Dixie on the 15-minute, it's just consolidating in this very, very, very tight range. So whatever direction it does go into, and I would think at the moment because of the price action and just the overall structure, I wouldn't be surprised if it's on the up. Still not going to shake me out of the gold position because the gold position still looks good and still holding. So we will see.
Yeah, the dollar index dollar has been very strong, and it hasn't shifted back to the downside. That has been invalidated already. It did leave a number of order blocks above us. But none of them, it hasn't broken the structure, right? This is the structure.
Yep.
That is the neckline,
Exactly.
and it hasn't broken it. So to me, all of this
is in a
just
range.
retracement. Retracement for continuation. So it looks like it could continue to go up, and actually we already had a very nice quasi. Look at this. I will show you. This is the neckline on the bullish quasi. Let's get this out of the way, and I will move a few structures back. The fact that it came back into that weekly and bounced from that weekly makes all the sense in the world to me. And not only that, it also used that daily order block, right? Touched it one time, a third time, and on the fourth time, that's what it needed for that reversal. So the reversal happened at a relevant place. Let me get that out of the way. And what do we see? Look at this. We had a succession of lower lows and lower highs, which is the prerequisite for a reversal. I think this is the lowest point. A break of the neckline comes back. Where does it come to? Look at that. Where does it come to?
It's a nice quasi.
That's perfection. That's beauty. It actually did not reach it, but I mean, sometimes I don't know, this is the index, so sometimes the spread at the of hours may cause something not to reach it to the pip, but I mean, it's not a coincidence that it is right there. It comes very close to it. And let's see, if we go to the lower time frames, what do we see? Let's see. I mean, this in my world, this is what we want to see. Want price to go all the way down. And how do you think people feel as price is going down? And that's exactly where it's counterintuitive the way I trade, but that's where I will be looking for my entry, where it seems like it's going to zero. With this kind of bar, I mean, who wants to be a buyer? But that's where I want to be buying, because that's the area that I identify on the different time frames. So, I mean, that's it didn't show the quasi on this time frame. Let me get it on the lower time frames. Let's look at this. I don't know if it did not have an entry, but you can see even if you don't trade the quasi, you can see that nicely round bottom, right? So that's also a way sometimes market reverses. Much more difficult to trade, I think, than easy to see, but difficult to trade in compared to, let's say, the quasi. But yeah, that's That's a nice nice price action there. All right, so
Gold. God, oh God, it's 5 o'clock already. Seriously,
it
let's see
is.
what this gold
It
position is
is.
going to do. But we're actually leaving. Gosh, just where the market's going to start heating up, and let's see what happens. Guys, yeah, no giveaway. If you just literally come in right now thinking about the giveaway, then you haven't been here for the whole thing. You would have known there's no giveaways until we reach 40K subscribers. We're going to do a big giveaway to celebrate 40K subscribers. So we're saving all of those giveaways for then. So if you're here because you enjoy being here, and if you're here at the end for the giveaway, then you've missed out. So that is it. And we've got
And
Jonathan.
look who is in the chat.
Hard
Jonathan.
life. He's with his family on holiday in a beautiful villa. Tough being Jonathan. Really tough.
Really tough, right?
Yeah, man. Yeah.
All right, we
But there you go.
have this week, guys. We have tomorrow a great show for you prepared, and Wednesday again. So please tune in. Make use of it. Jonathan says, "Hard life by the pool." Oh, I'm jealous. I'm jealous.
We're gonna have to put a W into the chat for Jonathan for that. You know, that's definitely a W. Chilling by the pool, watching the stream. I'm gonna put a W in the chat for that.
All right, so I think that's it for us. Tune in tomorrow. As I said, we will continue our stream, or we will have a workshop, actually, I should say, in Discord. That will be starting in about 35 minutes. If you're a member, tune in, and if you're not, you're missing out. So get your account to get your access to our Discord community. It will help you by a lot. You will have a lot of value just by being a member, and exchanging and absorbing other people's advice and experience. So that's that. I thank you all for being here. Alex, do you have some
yeah, I was just gonna say that tomorrow a lot of people have been asking questions that are really fundamental related. We have, like, all of us have basic understanding of fundamentals and do use them in our trading, but the best person to speak to is obviously Jordan. He's coming in tomorrow. We're going to do fundamentals v technicals. So any kind of questions, anything that you want to know, make sure you're here tomorrow and you can ask him, and we can go through all of those different things. Other than that, trade well.
All right. See you guys tomorrow.
See you later, guys. Bye.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.